Welcome to the Transparent FX Academy. What we will be doing in today's video is performing a live swing trading analysis in the market to see what kind of opportunities we can be looking for on a specific pair. Obviously looking at the market both from a technical and in order flow perspective, so performing a full multi-time frame technical analysis breakdown on the pair. And by the end of the video, you will know exactly which is the best area to be looking for a potential opportunity on the specific pair that we will be analyzing. And obviously I will keep the analysis very educational so that you will also understand the key elements that you have to incorporate in your own trading plan and trading strategy. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share a lot of free education analysis on my platforms every single day. So I really suggest that you subscribe to the channel so you won't miss out on all this education, and I will see you in the video. Today, the pair that I want to speak about is EURCAD. And as usual, I will keep the analysis very educational and practical because by the end of the video, you will know exactly which kind of opportunity we can be looking for on this pair. Now let's start our analysis first from a technical perspective, then we will look up the COT data. So the institutional order flow to see what the biggest banks and institutions are currently doing on the Euro and on the CAD. And then we will see what kind of opportunity we can be looking for on this pair. Now let's start analysis from the monthly time frame. Now on the monthly, clearly we have a market that is approaching and has approached and already rejected a very strong level of resistance. In fact, from here the market had started all this move to the downside. Again, the market had tested and rejected to the downside this structure level, and the market has tested twice this structure resistance, and lately the market already rejected to the downside after testing the supply that we have at this zone. So immediately from the monthly, we can see that the market rejected a very strong monthly resistance. However, there is one important thing that we had already identified in our previous analysis on EURCAD. In fact, we had gone on the line chart to see where is the previous monthly close, and we had identified the previous monthly close exactly at this area here, which is the previous monthly resistance, which is now monthly support. And if you remember, in our previous analysis, the market still hadn't reached this level, and we wanted to see the market actually make it to this zone, which is exactly what the market finally managed to do. The market went to test this strong support area. Going down on the weekly, what do we have? Now on the weekly time frame, after the market had created this very strong impulse to the upside, we wanted to see a retracement, and that is exactly what the market did, and the market just hit our downside target. Also from a daily perspective, the market went to hit this weekly structure from a daily perspective, creating exactly the waves that we wanted the market to create. In fact, in our previous analysis, what did we say on EURCAD? The first time that we spoke about EURCAD was after the market had created this M formation, and we said after this M formation from here, we want to see the market give us a move to the upside to go and complete the pattern at the neckline, aka the previous support, which is now turned resistance. In fact, after in M formation, what do you want to see? You want to see the market make a move to the upside to the previous support, which is now turned resistance. And that is exactly what the market did. Then again, we spoke about EURCAD after the market had completed this retracement, and we said that from here, we wanted to see the market give us another impulse to the downside for the creation of this impulse, correction, and impulse pattern to the downside, which is exactly what the market did. And obviously we capitalized on this move to the downside with students. And then again, we spoke about EURCAD after this impulse and correction, explaining why from here we wanted to see another move to the downside to go and test exactly this monthly structure, which again is exactly what the market did. And I will link all this previous analysis in description so you can go and check it out for further reference and more free education, because the market reacted exactly to the patterns that we wanted to see the market create. And where is the next opportunity for EURCAD? Now, as we said, the market just approached a strong monthly support area. And on the weekly, we have this impulse and correction pattern. And after an impulse and a correction, what do you want to see? You want to see the market at least try to create a continuation to the upside. Specifically, if you want informations on this retracement, you have to take your Fibonacci from the low to the high of the impulse. And by doing this, you can see that the market retraced exactly to the 0.618, which is obviously the golden ratio from which you would like to see the market give you a move to the upside. Going down on the daily, what we can see? Now on the daily, we can see that currently the structure of the market is still bearish. Why? Because we have previous daily support here, which is now turned resistance at this area, which was one of the reasons for which we wanted to see this move to the downside, as you remember from our previous analysis. And this resistance is still holding as daily resistance. So until the market will be below this area, we cannot be looking for a long, even though on the weekly we have the impulse and correction and we would like to see the market start a continuation to the upside. We can't be looking for the long because we are below daily resistance, and it is never a good idea to be longing at a daily resistance area. So how we will be approaching this kind of situation with students? Now, before I show you that, let's go and give a quick check at what we have from a euro and a CAD perspective if we look up the COT data, so the commitment of traders and what the biggest banks and institutions are currently doing in the market. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or speak about in the next videos. Now, from a euro perspective, we can see that in the long term, we had a massive shift from having a negative net positioning of more than minus 100k net positions with 157k longs and 271k shorts to a situation where we now have way more longs than shorts. So completely the opposite situation with 266k longs and 66k shorts. And in fact, all euro pairs, specifically Euro USD, created a huge move to the upside because institutions have been longing Euro USD. And what we can see with the last report is that the longs decreased of 6.8k, starting a profit taking on all these longs. However, we don't see this backed up by proper shorting. Shorts have been closed as well, meaning that institutions are still not that interested in the shorts on euro pairs. So the euro is still strong. And if we go and see what we have from a CAD perspective, we can see that with the last report, net positions decreased from minus 29k to minus 33k, with another 6.2k shorts getting added, bringing the short exposure at 37%, long exposure at 13%, longs at 19k, as shorts and at a 53k. So CAD weak, euro strong. What can we expect? A move to the upside. However, trading is not predictive. Trading is reactive. We don't know if the market will make the move to the upside. The market can easily reject this resistance and continue the move to the downside. However, what we do know is how to position ourselves with good probabilities and good risk to reward. And where are the best probabilities and best risk to reward on this pair? Now, if the market will manage, and we have no confirmations that it will do it, but if the market will manage to break above this structure, then the market will have created this daily W formation. And after a daily W formation, you expect the market to go for a retest of structure, specifically for a retest of this previous resistance, now turned support. So we will have a market that goes to retest new daily support with a bullish pattern on the weekly, as we have previously identified, strong euro and weak CAD. And after the break on the retest of this level, this is exactly where we will be looking for a trading opportunity with students. On which time frame? On the 4-hour time frame, because the monthly, the weekly, and the daily are the best time frames when it comes to the direction of the market, but the best time frame for entry is the 4 hours. So with students on the 4-hour time frame instead of this area, we will be monitoring price action, waiting for the market to provide to us one of our valid entries, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of this impulse, correction, and impulse pattern to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, Every day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as having me personally answering every single question that you have every day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in the program.